Next transaction that we're going to look at is incomes received in advance. Incomes received in advance. So this is when an entity receives income, but they've not actually yet provided the service to the other party. So let's look at an example. If we look here at transaction number 3, you will see that Focus Limited entered into a 12-month lease agreement whereby they rented out some of their office space owned by them at 4,500 Rand. The lease agreement was signed on 1 September. So the words, so what is this? Is this a rent that is Focus Limited paying, or is this rent that Focus Limited is receiving? Well, the words that give it away is the fact that Focus Limited rented out. That means they're actually going to receive rent income because they rented out this office space that they owned. Because Focus Limited is the owners, they will actually receive the rent income from renting out this office space. Good. So let's look at, when we get to adjustments, one of the most important things to look at first is the year end. And the year end here is 31 December 2013. Let's indicate that on our timeline. So here we've got our financial year that goes from January 1 January 2013 all the way up to, there we go, 31 December 2013. That's my financial year. Now the question is, how much of rent income actually relates to this financial year? Let's have a look at the current picture. What has happened currently? Okay, so we're going to have a look at the current picture, which we'll get from the pre-adjustment trial balance and the additional information. And then we're going to have to process the adjustment in the general ledger. And then we'll finally finish off by the actual true picture after we've done the adjustment. So what is the current picture? How much rent, how many months rent have we received up till the 31st of December 2013? Let's have a look. Let's find rent income. Here it is. Rent income. 54,000 Rand worth of rent has been received. And what is the monthly rent income? It's rented out at 4,500 Rand per month. So how many months? If we take the total rent income received and we divide it by the rent income per month, right? So if we do this on the side here, we can say rent income, rent income received over rent income per month. That's going to give us the number of months. Right? How do I know that? You can say rent income at the top is going to be rands, and rent income per month at the bottom is going to be rands per month. You remember from your fraction rules in mathematics, rand divided by rand per month can actually be written as rand times month over rand, which is going to cancel. Those two are going to cancel out, and I'm going to be left with months. Okay, that was just a long explanation to explain to you that the rent income that we've got here, 54,000, if we take that and divide it by the rent income per month, 4,500, I'm going to get the number of months that I've actually received rent for. So that is, I'll do that on the calculator, 54,000, and I divide that by the 4,500, and that gives me 12 months. Okay, so I've received rent for 12 months. So the current picture is I have received rent from the 1st of September, which is around about here, all the way for 12 months. So up to there, This will then be the 31st of August 2014 from the 1st of September 2013. I've received rain for 12 months. Right, so this is the current picture, which is going to reflect the rent actually received in cash. So the rent received in cash is 54,000. That's what we had here. 54,000 rand. Good. There we go. My rent received in cash. Then what we need to decide and figure out is how much of this rent relates to the financial year. And that's pretty easy. If we look at our timeline, we can see it's only this portion here between September and December that relates to the financial year. So that is going to be a period of 4 months. So this period here from September all the way up to December is what actually relates to the financial year. So that is the last 4 months: September, October, November, December. 4 months. Good. So the income that relates to this financial year is only the last 4 months. So the true picture of income that we should have recorded, remember the current picture is what is actually now already in the trial balance, is 54,000 Rand, but we should only have recorded 4 months of rent. So the rent that we've deserved is only 4 months. So 4 months rent is 4 times, go back to the question, 4 times 4,500 Rand, right? 4 times 4,500, and that is going to equal, you can get your calculator. I'm just going to do this in my head. 4 times 4 is 16, plus 4 times 5 is 2, so that's going to be 18,000 Rand. Right, so that is the rent that the business, which is Focus Limited in this case, actually deserved during the financial year. They've only deserved rent for 4 months. Because obviously when you get to the 31st of December, they've not yet been able to rent out their facility for this remaining 8 months. Okay, so this remaining 8 months here, how can I indicate this? All right, this remaining 8 months, they've not yet provided office space for this 8 months here. So this portion, they actually still owe to the party to whom they rented the office space. So that's why we're going to have income received in advance as a liability, because Focus Limited in this case still owes this service. Right, so they're not owing any money to another party, but they owe them the service, which in this case is the provision of the office space for the next 8 months in the next financial year. So the difference then between the current picture and the true picture is going to be my adjustment. So let's quickly calculate that. My adjustment is going to be the difference between the rent received and the rent actually deserved, which is 54,000 minus 18,000, and that is going to be, my calculator, you can do that in your head probably, then less 54,000 minus 18,000, and that gives me 36,000, and this is the rent adjustment that we need to make to the rent income, because the current picture shows 54,000, but that is not the correct picture. The correct picture is this 18,000. So to get it from the 54 to the 18, we had to minus this 36,000. Let's quickly indicate this on our general ledger. So our current picture for rent income is a credit of 54,000. Right, we got that here, rent income 54,000. But the true picture is actually a rent income of only 4 months, the last 4 months, which is 18,000. Right, so to get it from the 54 to the 18, we had to process this adjustment of 36. So this is the adjustment that we had to process. Good. So we process our 36 on the debit side of rent income, 36,000. Every debit needs to have a credit. And because we have received the money for the last 8 months, but we've not yet actually provided the office space yet, we owe the other party the service, and thus we have a liability. So we're going to record a liability, one of these ones, and the correct one is the income received in advance. So we're going to put there 36,000, because that's exactly what's happened here. We've received the income, but we've received the rent, but we've not actually yet deserved, because we've not yet provided that service to the other entity. Good. That's the adjustment, the credit and the debit leg. And let's finally then show the true picture on the rent income. Remember, the T account is going to show you the full picture, what it was currently before the adjustment, the pre-adjustment figure. That's the current picture. Then we process the adjustment. And if you then total balances account, remember, since it's an income account, it doesn't have a balance, but a total. If we then total up this account, we'll see that we've got a credit of 18,000 Rand. Right, then one last thing to note is, and this is the actual rent income that we've deserved. Just double check it with our picture. Here you can see the 18,000 is the actual rent income, the true picture of the rent that we've deserved. Just finally, quickly, this account income received in advance is not displayed in the pre-adjustment trial balance, because it's an account that only originates when we do an adjustment. So that's going to have a balance of 36,000 Rand. Good, and that is how we record income received in advance. Brilliant. Just to quickly show you one more thing. What would have happened originally to arrive at this current picture of 54,000 in rent income? The entity probably would have received cash of 54,000 income received in advance. So they would have processed a debit on the bank account of 54,000 Rand, and then they recorded this income of 54, showing that they've actually earned the income. But then come the year end, we do our adjustments and we see that we have not yet earned the full 54,000, because we still owe services to the other entity. And after we've done the adjustment, we can see here we've got our two lines. This is the portion that we still owe to the other entity, the services that we still owe, and this is the portion that we've actually already earned and deserved. So you can see that my post-adjustment trial balance does in fact reflect the true picture of this 54,000 Rand received. Of this 54,000 Rand received, 18,000 is already earned, 36,000 Rand we still owe to the other entity. And the way we owe to them is by way of services. We still need to provide them with this office space. They've already paid it to us, we've received it, but we haven't yet provided them the office space